Hi everyone. Is ZIM Integrated Shipping a buy, sell, or hold? I'm going to answer that question in this video looking at this stock's revenue, cash flow, operating profit, and valuation to determine if I think the stock is a buy, sell, or hold. So let's jump right in with revenue. And what you'll notice here is a big boom in revenue in 2021, peaking in 2022 at over 12 billion, almost near 15 billion, and then coming back down to 8.1 billion in the most recent trailing 12-month period. And the reason for this big rise and fall is changes in shipping prices. Remember, earlier in the pandemic, people were buying more things, and so that created a lot more demand for shipping things, and so prices increased substantially. They were almost up tenfold at one point. However, since then, people's spending habit changed again. Now people are spending more on services, things like travel, eating out at restaurants, concerts, ball games, things like that, and not so much on buying computers, TVs, gaming consoles, and things like that. And that's been hurtful to ZIM Integrated Shipping, and that's what's brought down its revenue. However, longer term, I don't think things are going to rebound to where they were at the peak of the pandemic for ZIM. So it's not as though this downturn is temporary. This downturn may be where shipping rates settle at. And so that's the big risk with ZIM, is that you're getting a company where it's declined and it's going to stay in this state. That remains to be seen. There's been a lot of onshoring and nearshoring of manufacturing facilities as well, and that's not good news for ZIM either, because if companies have their manufacturing closer to where they're making their sales, then that leaves less demand to ship things across the world, and that's also not a long-term benefit for ZIM Integrated Shipping. That being said, the company was operating at significantly lucrative profit margins at the peak, at close to 60% operating profit margin. It doesn't need to operate at that level to be a good investment. Right now, its operating profit margin is falling quickly. Over the trailing 12 months, it's 23.57%. I would not be surprised if over the next few quarters this operating profit margin turns negative, as the company's dealing with the big decline in revenue. However, as it transitions to this lower revenue business, as it right sizes itself, it could return to relatively normal profit margins in the double digits, maybe 10 to 20%. The good thing is that ZIM Integrated Shipping is still generating strong cash flow, 3.26 billion in cash flow in its most recent trailing 12-month period. Now compare that with the 8.1 billion in revenue, and you can see the company converts a significant amount of its revenue into cash flow from operations. Its main expense, or one of its main expenses, depreciation, is a non-cash expense that it must incur on the income statement, but it's not a cash expense, so it's not a cash outflow. And so for that reason, the company's cash flow from operations will look better than its operating income. And given that it's right sizing the business, meaning that it's not going to be adding more ships to its fleet, it's going to actually be trying to decrease the number of ships in the fleet to accommodate for the lower demand environment. That means it doesn't need to shell out a lot of cash investment for new ships. So that could be a positive for ZIM cash flow going forward. And another good thing about the company, doesn't have very much debt, 131 million in long-term debt, a very small number relatively speaking compared to its 3 billion in cash flow from operations. So long-term debt not an issue for ZIM Integrated Shipping. And finally, valuation. And I chose to use the price to free cash flow because earnings were so volatile and turning negative. I wanted to look at its free cash flow valuation, and 0.439 is a relatively cheap valuation. It used to trade at more than 3 times price to free cash flow, now down to 0.439, a cheap stock. And so you're getting a company that's experiencing declining financial performance as the world is readjusting to consumer behavior, but you're also getting a company that's generating billions in cash flow and selling at a relatively cheap valuation. So if I was to say if the stock is a buy, sell, or hold, I would put it on the borderline of a buy. So right there, it's still a buy, but if it continues deteriorating, it could be downgraded to a hold. But for now, I would say the stock is a buy at these cheap valuations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.